spell, fill out something wrong, put things in the wrong place, so on and so forth, because it does happen. That's why we like Burdick. They know what the heck they're doing, and you can trust them. You know, the old saying, trust but verify. I still want to know it's done. I want to see what was provided. I want confirmation it was submitted to the escrow department for that mortgage company. Okay. Here's another insurance story to this point. Years ago, I had an owner finance wrap deal. I had a template filled out that I give my buyers to give to their agent. Here's all the pertinent information, the underlying borrower, me for the second mortgage, you know, those kind of things, had all those details in there, and give it to their agent so they can fill out the evidence of insurance page, or otherwise called the declarations page, and fill that all out, send it back to me so I can proofread it, and then they can send it to the mortgage company escrow department. Well, guess what? They didn't do that. They sent it directly to the insurance company without me approving it, and it was wrong. So they sent it back and made us fill it out correctly. And this time I got to proofread it, and it was correct. So everything was good. We closed. Insurance was fine. A year later, it's time to renew. Mortgage company sent them a bill, an invoice for the next annual premium, and they sent them an updated policy. And you would think that they would have saved all the information in the system correctly. They didn't. So they filled out another one and sent it in incorrectly again. So this time, the mortgage company's given us a written notice saying you got 30 days to get the corrected policy submitted, or they're going to put forced place policy on the property. Well, by that time, my buyer was in a panic because they knew that forced place policy was going to get expensive and we needed to fix it. So even though I'm no longer in the picture because I sold the house, right? I mean, I'm no longer connected to the seller or the buyer. I felt I had to do something to help. So I went and got a authorization to release information from both parties. But the seller was the one in particular I needed the approval from so that I could talk to the lender. And I submitted that policy and submitted the authorization. Typically, it's 48 to 72 hours to admit it into the system and approve it so that they can see it in their system when you call in. And then I just had to call them and tell them. I told them exactly what happened, told them the home's been sold, you know, the insurance agent filled out the thing incorrectly. You know, what do we have to do? And she said, well, you just have to get this back covered properly and then it'll be good. Well, they knew exactly what we did. You know, there's no way you can tell me they didn't know that the home was sold because we now had a policy with a new primary insured owner. That's the way it has to be. So they knew. All they wanted was to have the home insured. That's all they cared about. Does that make sense?
Yes.
The other thing is, so I just mentioned this, 24 to 72 hours to have that information, that authorization release in place. Be truthful. And only say what needs to be said. You don't need to get diarrhea of the mouth and tell them everything that happened. Sorry. You just need to be honest with them and tell them only the minimum of what's needed. Answer their questions directly, quickly, but don't expand and tell them the whole story of everything that's been done. Okay. Don't lie to them, but you just tell them what they need to know. Okay. That really is the only time I've ever had to deal with a mortgage company directly was because of insurance. If you ever have or insurance claim. But again, if you had that authorization correctly filled out, you won't have a problem with doing that. That's why they have an authorization, a third-party authorization, because you think about it, property managers act on behalf of the owners all the time, right? So Just keep that in mind. Relax. Don't get nervous. Relax. And they're not trying to take the house back. They don't want the house. All they want is the payment. Okay. So be honest, clear. This is communications with the sellers. Be honest and clear with periodic communications. Use any excuse you can to communicate with your seller. And my recommendation is put a question in your communications. How's everybody doing? Did you get a new house yet? You know, ask them questions about family, you know, how's everybody doing with COVID? Things that require a response back so that you know that they're receiving it. Okay, does that make sense? Don't just send them an update and not ask for any kind of feedback. Try and get all that information. Well, guess what I did? I didn't pull up the form for you, but the form that I gave you on the items needed from your seller, the second page is asking for, again, this is part of your closing documents, just like everything else. I asked for the full seller's name, full spouse name, the best email, the spouse's best email, cell phone numbers. Do they take text? Yes or no. The spouse's cell phone number, text, yes or no. What's their social media accounts, and their new forwarding mailing address. Okay. Ask for that information because it's so important that you keep in touch. If I wouldn't have kept up with my seller that moved to Okinawa, Japan, I'd have had a problem. And not only that, would I have had a problem? It would have been a problem for my tenants that were living in the house because it would have been delayed in trying to get the house repaired and get them back in there. So this is very important that you understand this and get this kind of information and keep in touch with them. Okay. The sellers have got to understand how important this is, that you're in a long-term relationship, whether that means 6 months or 5 years. In my case, I have a couple that are 11 to 12 years. I mean, that's a long time to be in a relationship with a seller, right? So you have to keep that periodic communications going with them. You want to do the same thing with your buyers. You know, don't let buyers fall off the face of the earth just because they bought your house. Keep in touch with them. Especially if it's an owner finance buyer, you still need to know that they love the house, they're working on credit repair, and you still want to be able to keep in touch with them or track them down in the case of them abandoning the house. Does it happen? Not very often, but it does happen. Okay. I've had one that's filed bankruptcy on me years ago. And I've had a couple deed in lieu of foreclosures, but you know, I always have all this information for them. We've had one that last year or year before, I had an owner finance buyer in there and they decided to sell the house. We couldn't find the seller. The seller wasn't responding at any of the contact information I had, even after I'd been talking to her. Turns out she was in Washington, D.C. in the hospital because of a major stroke. I didn't know that, but somebody found a family member and somehow connected that way. So you just don't know what's going to happen. You want to use every bit of information you can to try and keep in touch with them. Any questions on that so far? Okay. We're going to keep on moving here. Okay, customer testimonials and reviews. Today is not too early to start building your online reputation. Even though you may not have done a deal yet, especially with subject to type deals, you know, you want to start building that reputation so that people can find you and they see what people think of your services. Okay. Very important. Don't miss an opportunity. It's hard enough to get buyers and sellers to cooperate and take the time to do this. So you want to make it as quick and easy as you possibly can. So now what I try and do is at closing, try and do a video testimonial right there on the spot. Why do it there? While they're excited, right? Isn't that the time that they're going to be the most excited? The further after closing that you get with them, they're not going to be quite as excited, or they're going to be busy and back to life, normal life again. I recommend you try and get the video right there. If they won't do video, you can have them do a written testimonial. That's second best. But then you also have your social media reviews. If you have a Better Business Bureau account, which I do recommend, you can go there and just give them a link. They now have an app that you can just do it on your phone and send them a text message. They answer a couple questions and they're done. That's really simple. If you don't have a Google My Business account set up yet, I recommend you do. I'm going to ask you to go to my Google My Business reviews page for this group. The link is right there when you receive this. Just click on the link. It'll take you right to the review page, answer a couple questions, check 5 stars, and you're done. Okay. Appreciate you doing that, by the way. But it's going to help you. People expect to go online and read about you and your services and how well you take care of people. Don't miss out on an opportunity to take pictures with your sellers and your buyers. Take a nice picture. Again, you can do that at closing. I took a picture one time of an owner finance buyer in Martin's office. We had a big round table and they brought cash to closing. I think it was like $12,000 or $15,000, and we laid that cash out all over the table. And we took a picture of it at closing. So it was pretty cool. Matter of fact, that's one of the sub 2 deals I still have right now that I've had for 11 or 12 years. That buyer just hasn't gotten themselves in a position to refinance. Okay. Again, it's best to do it at closing. And the other thing that you should do is work on creating links that you can just share with people. So if something happens, you can't do it. I have a Word document, for example, with 3 or 4 links in it that I can send them for Google My Business, Facebook, Yelp, things like that. You can just send them those links and ask them to go click on the link and it takes them right there. So if you make them work for it, then it's a slim chance or a reduced chance that they're actually going to get it done. Okay. So make it as simple as you possibly can. Any questions on that? Okay. So, okay, we're moving right along here this afternoon. Okay, 1 second here. Let me see if we can get Martin on. 1 second. Okay, Pam is going to check and see if we can reach Martin and bring him on a little bit early. Anybody have questions so far while she's checking on him?
Tim, I have a question. Like, how can we find the buyers, the owner financing buyers? Is it like we are doing the marketing ourselves? Like, how do we do that?
So it's marketing. It's something that you're going to want to start doing on an ongoing basis. It's not just about finding sellers, right? You have to be building a buyer's list. I can partner with you on that side of the business as well. I have a buyer's website for owner finance and renters called ownatexashome.com. And we have a lot of people that are coming into our buyers list on a normal basis. I mean, we have hundreds of buyers that we don't have houses for. So it's something that we're real good at. Of course, you got to remember, I've been doing this 20 years. I'm trying to look for something here. So I'd be happy to help you with doing that. But what you'll want to do is work on getting your website set up to be able to start soliciting for and building your own buyers list. You know, you want a buyers list for investor type buyers as well as owner finance buyers. You know, you and renters. If your plan is to rent properties, then you're going to want to do rentals. You know, you're going to want to be marketing for renters. You can actually joint venture with me or other investors to help you find those kind of buyers and renters, you know, until you get your own list going. But why not partner with somebody to help you, right? Especially like me, I've got this website that's probably 18 years old. Google loves Own a Texas Home is the site I'm talking about. And then we use Trade Cash for Houses and All Wholesale Properties for building our investor type buyers list. And the benefit to having those kind of property or those kind of websites out there is that they work 24/7 for you. And that's what you want. You know, when you first get in the business, if you're a wholesaler, you know, you're working hard. You're doing a lot of manual labor. You're trying to call investors. You're trying to move the deals because you have a small list. But as that list gets bigger, then you can send it out to the list one time and probably get it sold, right? So that's why it's important that you start that piece of the business. You don't have to do it today because I can help you or other investors can help you, but you also have a powerful system already in your website, your group website. You have a website already that posts your property right on the group site. Your free website that's included in your membership, right? Does that make sense? I'm trying to find.
Yeah.
Sorry, I'm not doing very good trying to find this slide here. But let me go back and show you this real quick. You can't see my my group webpage, can you?
No, it's your slides.
Okay. All right. Okay, can you see the webpage now? So
Yes.
if you're a paid member of the group, which you are, Nellie, you have a free website included in your membership. So when you post a property you have for sale or rent on your site, it automatically comes up to the group on the property listings page right here. So that in itself is a powerful tool and can help you sell your properties quickly, right? So my website is DFW House Solutions that's connected to the group site. So when I post a property on there for sale, it displays right here. Right now in the group, we only have one person with a property. Okay. So that would be the very first thing you should do. And then every time somebody responds to you on this, you should be asking if they want to join your buyers list. So you can start building your list with every contact that you make. Does that make sense? So,
Yes.
and then you start using the alternate sources like, you know, with me, I can put it out through RealFlow and put it on my owner finance list with ownatexashome.com. That's just, you know, another way of helping you move that property quickly. So, but any other questions at all on that? So I'm still trying to find slide here that I wanted to show you. Pam, were you able to get anything out of Martin?
I have called and left him a voicemail and I've texted him. So it may take a minute since he's,
Okay.
Do we have a way to check on the quality of renters that are available?
Nothing in the group. I'm actually talking to a property management company right now
Okay.
that may be coming on board as a sponsor. They can help you with doing tenant checks. There are websites out there that you can go to as well. But we'd like to have a property management company as a sponsor in the group. And then they would be able to help you with either doing those kind of checks or managing your property for you.
Okay. Do you know if Texas Cash Cow is still in business?
I have no idea. Can anybody see my checklist now? No, probably can't, can you?
yes,
Oh, you can? Oh,
yeah, the steps to getting subject to deal under contract.
Yep.
That's it.
I wanted to come back to this because this tool right here, I think is going to help you be more comfortable when it comes time to get your first deal. These documents here are very important to you. And if you go through, some people worried about the sequence. There really isn't a specific sequence to have documents signed. But what I tried to do here for you is show you that these ones that say at the house, I kind of laid it out the way I like to have them signed. And really what you're trying to do here is get them to say yes, on each one of these forms and make sure there's not any kind of an issue. Okay. So the contract is the longest one. It takes the longest time for them to review it, digest it. You don't, like I said earlier, make them slow down and review it and before they start signing it. Even though their signature is supposed to indicate that they read it and signed it and agreed to it, the last thing that I want you to do is have a problem in the future with a seller that is a problem seller. Okay. So one of the reasons I think I've had such good success with my sub-2 deals is that I take the time to do this and make sure that they don't have a problem. Make sure that they do understand. I have had people leave my office and not sign the contract, which made me perfectly happy because that's better than at the closing table or down the road when they're all upset because they say they didn't understand what they were doing.
Hey,
Martin will tell you that I have never had anybody walk out at closing because they understand the deal. They know what they're getting into. They're not fighting it. They're not upset. They know what they're doing. And that's the way I want to keep it. Do I lose deals along the way getting to that point? Yes. But I want them to be sure and happy and comfortable with what they're doing. And I recommend you take that same approach.
Hey, Tim, there's a question from Keaton.
Okay.
He asked, does the new TREC contract affect your sub-2 contracts?
So ignore the new contract, the new TREC contract in relation to your subject to deals. That sub-2 contract that you have started as a TREC contract and has been really customized significantly, and it has not been bounced against the new TREC contract. I would recommend that you do not use the new TREC because there's so many different edits and deletions and additions and stuff that I wouldn't do it. Just stick to what you have. Okay. So anyhow, the sequence here is not important. It's just that this is how I do it. And I find that this works pretty good. Okay. You know, in reality, you could move this seller's property disclosure. You could move it down here last because there's not any kind of question about it. It's strictly the seller's knowledge of the condition of the home, what's in it, what works, what doesn't. But these other things, you know, they're all important. Every one of them is important, but it's just kind of the sequence that I go through them and get them signed. Any questions on that at all? Okay. And then while we're waiting still on Martin, I want to go back and show you one more thing. Somebody else has got to have a question, so tell me anybody have any aha moments, what they've learned today? Who's learned something that was important to them? Nobody?
How important the insurance thing is.
Yep. It definitely is. I hear more people worried about it. More people have trouble with it. And, you know, amazingly, there's people that teach leaving the old policy in place.
That's really interesting. The other thing I learned was that I was under the impression that really it was not to the much of a help for the seller to do subject to. It was much better to do REIA. And what you're telling, because then they can't really do much in terms of qualifying for another loan. So that's not what you said.
Can you say that one more time?
I was under the impression before this that using a subject to was not really beneficial for people. I mean, certainly if they're really in a jam, it would be, but under normal circumstances it would not be, because going forward, they would have a hard time getting another property. And according to what you said is that it has to do with ratios. And if they show that, they would be showing that as rental property. Isn't that correct?
Well, it's not so much that they're showing it as rental. It's similar to that in that if you're leasing it, you have a lease agreement.
Right.
That shows somebody else is paying you such and such amount every month.
Right.
And the mortgage company knows that your note is, let's say 700 and your lease is 1100. So it's being paid that way. It's similar in that you have a sales contract. So it is, even though it's on your credit still, you have a contract that says it's sold and you have this new buyer that's paying that mortgage.
Mm-hmm. Okay.
So even though that new buyer's name is not on the mortgage, somehow they're giving them some credit level there. And maybe Ruth Ann could answer that question for you. She's not on the call today, but she's our sponsor in the group with Service First Mortgage. And maybe she could answer how they do that, what they call it. But I've always been told that it's all to do with their overall credit score, what they're, are they paying all their payments on time, and what their debt to income ratio is, and can they still afford a house? It may not be a $250,000 house. It might be 225, 210, 200. It might be a smaller priced home, but they should not be disqualified just because of the fact they sold that house. Like I said, I've never had a seller tell me that they could not buy a house because of how they sold it.
Okay,
Never. Never.
Okay.
So can you
That's
see
good
my screen now?
Isn't it true too that suppose that you have a seller that has really bad credit, if you do a subject to and you start making his payments, that it's going to help his credit dramatically, isn't it?
Absolutely. As soon as you start making those payments on time, it's going to start improving their credit score. That's one of your pitches to the seller as to the benefit to them of paying it or selling it this way, because you are going to be paying it on time.
yeah, that's a good point. Thank you.
And you also, that's also another big benefit of using Amy and August REI, because they set them up to be paid on time like clockwork. So you can be sure that it's going to get done that way. So absolutely, big benefit to that seller that has bad credit. Okay, can you see this form I have here?
Yes.
So this is the list of items, and I've changed this a lot. This is the list of items that you need from the seller if you're taking over their mortgage. So you're going to give this to the seller, and you're going to tell them to, go get all these documents, go get all this information, or fill in the blanks where needed. And this is I kind of thinking of it as an administrative checklist. Pam hasn't seen this because I just updated this thing, where I put this little space off here to the left so you can initial it or check it off as you receive these items, because there's quite a few things here. And you don't want to miss this. You need these items from the seller. If it's applicable. I mean, for example, home warranties, did they put a roof and a AC unit in it? You want to get that warranty, things like that. So you got all these things. This gives you the administrative ability to go down through here and check off those things that you receive from the seller as you get them. Okay. Notice I'm pretty specific here about digital color copy of driver's licenses. How many of you seen copies of driver's license or social security cards that you can't hardly read them because they've been copied and they're blurry, running them through a machine and stuff? I want you to tell them to get it. Everybody's got the digital copy capability today, right? With a camera, a phone. So have them do a digital image of the driver's license and social security card, and make sure you can read it. Don't let them get away with giving you crappy copies of it that are blurry. And then remember, I told you earlier about the new stuff I added to the end. You want to ask those sellers for this information. This is your chance to have it before you even go to closing. You need this information. You want to know how to connect with those sellers so that in the future, if you ever need it, you have that info. If you let them get away from closing, the harder it gets to get that information, especially if it was a distressed seller that was leaving town. If it's somebody that's staying local and they weren't really distressed, you may be able to have success getting it. But why bother? Why not get them while you can get them, and just ask for all that information up front? Notice that I added in a few comments here of the things at closing. So people aren't going to give you their garage moats. They're not going to give you their house keys, things like that before closing, right? So there's certain things here that you want to get at closing. So I tried to identify all that stuff. So, these are Word documents. You can take and tweak these things to meet your needs and customize them for your business. But this is going to help us too, but I wanted to show you what I did here because I think this is going to really help you quite a bit. Make sure you ask them you can't just have a username and password anymore online. You got to have all these security questions. And, a lot of these sites have the security PIN code. So even if you knew the username and password, the PIN code's still going to the owner. So they still have to be in contact with you to send you the code that's sent to them by the system. So again, just going back to my point earlier, it's so important to make sure that they understand that you're going to be dating for a while. You and the sellers are going to be dating for maybe a couple of years, right? Because it's not over until it's over and their loan is paid off. So they need to be responsive. They need to be cooperative. And I think I said it earlier, if you get the gut feeling that they're argumentative, they're pushing back, they're not cooperative, they're not even responsive to you now while you're trying to help them, how responsive do you think they're going to be to you later, 2 years down the road, 5 years down the road, when you really need their help? So even though we try to get all the documentation, all the authorizations and stuff that we need and signed up front, there may be a circumstance that you may still need them to help you through a deal. And if nothing else, tell them that you still need to keep in touch with them to be able to let them know when their mortgage is paid off, because most of them want to know that, right? So if they change emails, change phone numbers and don't tell you, it's going to be hard to really tell them about the good news when you have it.
Tim, Martin is logged on and ready to go.
Cool. Welcome, Martin.
Hey, thanks for having me.
You bet. Thanks for joining us. Let me get the slides back up here. So, closing is a big day for your subject to deals. Let me get back to Martin's slide here real quick. That's a big day, right? You work hard to get those deals to the closing table. And it's, can you see that Martin's slide now?
We can't
No.
see it.
Okay. All right. Be right there. Hold on. Really having some trouble with sharing this stuff today for some reason.
Now we can see it.
Okay. So Martin and I have been working together for, I don't know, 4 or 5 years-ish, maybe longer. I don't know. And, I was introduced to him back then on an owner finance wrap deal, which not all title companies do. And then we started talking about subject to deals and land trusts. And it turns out that, he's knowledgeable and willing to close those kind of deals for real estate investors that know what they're doing and want to do them. We've since worked a lot together. They've been a sponsor of the group for quite a few years as well. As a matter of fact, Martin will be speaking to the group coming up in May. And you're going to want to make sure you get signed up there because he's going to give us a good legal update and some other things. I think we're going to talk about forbearance a little bit too, right, Martin?
That's right.
So,
Among other things, yeah.
But the point I want to make is, I appreciate all Martin does for us because of his willingness to work with investors and do the right thing and get these deals done. There's a lot of title companies that'll say, yeah, we'll do that. And then next time you go to get help, they don't do that. So we've been working together for quite a while and I really appreciate that. And I'm going to turn it over to Martin and I'll let Martin tell you more about Martin.
Yeah, appreciate it, Tim, and everyone. Again, thanks for having me. Had a golf tournament this morning and we just finished. So excuse my decorum today, wasn't in court. But always love working with investors, with folks like Tim who have an understanding of how to get the deal done. And I appreciate what he said about our title company because that's exactly what we do. And our underwriters have the same mentality in terms of how do we get this done. It's not always the easiest, but we create the path and the game plan to get that subject to owner finance wrap Harry deal done. Tim, I jumped on about 10 minutes ago and I heard a little bit about dating with the seller. Not sure where you want me to start in terms of getting to the closing table on your sub twos, but you tee it up for me and let me know.
So I think, Martin, we were talking about long-term relationships. It's not like a wholesale deal where you do the deal, they go your separate ways and you never see them again. We need to keep in touch and work together. It's like becoming a family member. I just, I've had some good success. I've never had deals fall apart at closing. Just wanted to, from your perspective, why you think that is, with the sellers that we send you, why it goes smoothly, the documentation that we're doing, why do we see success and getting these deals done. And then there's a couple slides here that we can scroll through as well and let you talk to those. The one thing I would say on this first comment here is that this comment right here is probably one of the most important ones here, is that you attend these closings with your sellers. There's a lot of deals, like a retail deal that may not necessarily be important. But when you've got a sub 2 deal that you're taking to closing, you want to make sure it closes. You cannot expect Martin or his team to explain the deal again to the seller. Martin's there to get it signed and do the documentation. He's not there to be your sales rep. So you want to go with that seller in case they have a question or a problem with or they quickly forgot overnight why you're doing what you're doing. So I'd recommend that you do go with the sellers so that they understand that deal. You also want to make Martin aware of what the deal is so that, it's clear to him and what documentation and stuff's required. Don't make him second guess it. Make sure they understand what that deal is.
I can jump in there, Tim. Folks on the call, Tim knows that I like telling stories, real life scenarios, and what you might run into at the closing table that might prohibit us from closing and insuring. So I'll start there. Recently, we had one where a deal was brought to us. We had the game plan to get to the closing table to fund the deal. However, one of the parties was less than forthcoming. So a lot of the theme of what I've heard the past 10 minutes is have that candor with your seller. You don't have that working relationship and that trust, then we won't even get close to the closing table. So someone like Tim, who's always forthcoming, we've been very fortunate that we have not ever had to stop a deal from funding. Candor, trust, business relationship, and the title company that understands the deal, that's how you make it.
Okay. Don't expect the title company to explain the deal. I just can't stress that enough. I know many of you may be a little bit leery about going to your first closing or two and, how that's going to happen. What if the seller asks questions and stuff? But you've got to do it. And this is why you'll hear me talk about making sure before that seller signs, don't let them, if you see them skimming through the contract, just initialing pages and signing without any reading, stop them. Don't let them do that. It's great for them to trust you, but that doesn't help them. They can't absorb it through osmosis. They have to understand that contract.
Yeah, and to that point, we don't want you or me, the title company, none of us want the sellers to come to the table, or the buyers for that matter, not having at least a baseline understanding of what they're signing. And if you haven't had those conversations up front, to the folks that I look forward to working with in the future, Tim and I have that relationship that has been established for a while. So we're churning deals day in, day out. where I'm getting at is they're addendums. They're forms that we need signed, information gathering that we need up front. And again, the most important part is the conversation of what exactly the sellers need to anticipate. Nothing's worse than sitting there and explaining the deal and having those disclosures that are legally required on a deal like this, creative financing, and they throw their hands up, raise the flag.
Yep. So you'll hear me, whenever I'm teaching, you'll hear me talking about that a lot. You always, it is better for you to lose that deal before closing than to lose it at closing or lose it on down the road or have it go south on you in the future, because it's just that's gonna be one of those things that's gonna cause you to lose sleep at night. You know, you don't need that. Of course, people can sue people for anything they want to nowadays, but you don't need the threat of a lawsuit or, you know, you didn't tell me that, or, you know, things like that. You want to make it clear. And I do. I mean, to the point of, I've had people walk out of my office just, you know, when they were about to sign, because I made them go through and read it. And if you have any doubt whether or not they understand it, ask them what they understand. Let them tell you. Then you're going to know.
Yeah, does that make sense? Am I making sense? Do you understand what we're doing here?
Very important.
You know, I want to touch back on the information gathering. Again, I heard about you're dating the seller. I love getting not only their login, but like Tim said, their security questions. You are going to need to access this mortgage for the entire period that you are going to be obligated on it too, right? Not legally, but because you own the house that's encumbered by that lien. Get as much as you can up front. We have a very extensive subject to addendum, and I'm not sure if you went over it today, but that's what I like seeing up front. And that way we have everything that we need when we open escrow. Yep.
And, you know, to Martin's point there, there's a couple things that is really important on that mortgage info. First off, you need the access because you need to change the address for the mortgage statements. Why is that important? Well, you need that statement. You need to know when there's an escrow analysis done and it changes the mortgage payment. You've got to have that change. If you remember, I mentioned earlier about if insurance is screwed up, that's one thing that's going to cause the mortgage company to look at the account, see that there's been a change in ownership. They're going to send letters. That's going to get you spooled up because you're worried about it if the insurance is wrong. But the other one is if you don't pay the payment on time or you pay an incorrect amount because the escrow increased. So if they do an annual escrow analysis, which is a lot of times this time of year, they send out the new escrow statement. I've got one in my briefcase here. I just got the payment goes up $60 some because of taxes or insurance. I don't remember which. So when you submit that payment, the old payment, and it's $60 short, it puts that payment into suspense with the mortgage company. Guess what? That doesn't get credited to the account. Now the payment is in default. And if that doesn't get corrected, they're going to start sending letters, you know, and now you're going to start creating a problem and you're going to cause the lender to look at the account and see who is on title. They're going to send notices about you being short and so forth. So very important that you have that change of address to you so that you can see that information. What you don't want to do is you don't want to take the seller's email address off the account. You need to keep the seller's email on there. You can add your email, but you don't want to take the seller off it. The seller still needs to be able to log in and see the account information. You don't want to hide it. You want full disclosure. You want them to see that the payments are being made on time so that there's no issue concern there. Does that make sense?
Full disclosure is always huge. And I want to stick on the topic of being in the escrow analysis time right now, January, February, for most mortgages. When we closed sub twos in the last quarter, we have some sellers that start asking, and as you should be prepared to know what's in escrow, are the taxes being paid out of escrow, what's going to remain in the escrow balance, because a lot of these times these sellers are distressed, right? So if you have someone that accepts X number for the exchange, for the deed, they get a sum at closing, you buy it sub two, done. They're going to start asking, what's in that escrow account? What about the insurance money that I have? Taxes were paid at closing. Things to watch out for. Back to the point of title company that knows how to handle the complexities of taxes and insurance when you're keeping it in place, but changing title holders.
And we have a form for that. We disclose to the sellers that that they are giving up that escrow dollars that are already there. So that's done before they ever get to Martin's office. They already know that they don't get that refund. That doesn't mean they're all happy with it, but they already know it because we've already discussed it with them. And we do that because those dollars have been collected throughout the year to pay that annual tax and insurance payment when it's coming due. Why would I want to have to go pay all of that money out of my pocket come the end of the year? I want those dollars to stay in the account. Are there exceptions to that? Maybe. But we try to standardize what we do, and that's one of the things that we do is we have them acknowledge and agree that those dollars don't come to them. And oh, by the way, another reason that change of address is so important is after they do that escrow analysis every year, sometimes there's an escrow refund, right?
That's it.
Who do you want the escrow refund to go to?
So sellers will be happy if you don't change that address.
You want that check? I want that check.
Well, you own the property.
That's right. But like Martin said, they'd be happy if you don't change the address because that check is going to go to them at that time. That escrow, that annual escrow refund, if there is one, is going to go to whatever address is on file there. So that's another good reason to get that changed. And it should be done, immediately. So.
Yeah. And back to the timeline of how long you'll have a relationship to the seller, be sure you're having the conversation that gives you a good idea of what the seller's plans are. You don't want a seller coming back for whatever reason that they were distressed a year later and saying, I can't get a mortgage because I still have one in the house that you own. Seldom do I see a due on sale clause enforced, probably 2-3 times in 15 years, but it happens. And you don't have that relationship with the seller. They start raising flags to the mortgage company. Guess what? I don't know what's going to happen this year. I suspect there are going to be a lot of foreclosures, a lot of sub twos. What if your seller starts contacting the mortgage company and they want to enforce the due on sale clause? They have every right to. So have that game plan with the seller and have plan B for yourself in the event that there is the unfortunate circumstance that the lender wants to call the note due.
So we did talk about it quite a bit earlier, Martin. Yeah, I mean, it just, in 20 years I've been doing this, I haven't seen one called due. I had one close case where I sold a house that was not escrowed. and I'll never do that again. You know, you live, right? I had one house that I sold on a wraparound mortgage that did not have an escrow. And another nice thing about August REI services, they will escrow it for you if you need that. But this particular house, I didn't do that. Matter of fact, I'm not even sure I knew August REI when this house happened. But the buyer defaulted on his property taxes one year. And he went out and he gets a property tax loan from those loan sharks, the tax loan people. And you know, they're sharks, they're extremely high interest rates. Well, then he defaults on that loan and he didn't pay. And so they filed, the tax loan service filed foreclosure, which notifies the underlying lien holder, the bank, and I can't remember which bank it was. Might have been Bank of America at that time, but naturally they got excited. They sent the underlying borrower, the seller, they sent him a letter, said you got 30 days to get this property back in your name. So what did I do? Anybody have an idea? Guess, anybody? So I went, because I was a second lien holder with my buyer, I went and filed foreclosure against the buyer. I went and I paid the property tax loan. I knew I was getting the house back. I went and paid the property tax loan and paid that off, which stopped the foreclosure by the tax lien company against the lender, which calmed the lender down. He didn't, you know, they quit pursuing it. As soon as the taxes were brought current, I made sure the payments were current. I kept it current and I took the house back. I went in, remodeled the house and sold it.
Yeah, and just so everyone's clear, these tax loan servicing companies have a statutory right to step into the shoes of the government entity, of the taxing entity that's imposing, and that's foreclosing. What do I mean by that? It's not a non-judicial foreclosure, i.e. I'm foreclosing on a first or second lien that I'm trustee for Tim, that he doesn't own finance. No, these folks get to foreclose at the tax auction, not the first Tuesday sales for trustees.
Yeah, so it was a lesson learned there. I will never, ever, ever sell another house without an escrow account. It's just not worth it. So, you know, the guy made a lot of money when he bought the house. I'm not sure why he wasn't paying taxes, what happened, but it really impacted things. And I know I didn't like having to deal with it, but I saw what I needed to do to stop it, and I did that. So, okay. So Martin, I think that's all I have right now for you. As I mentioned earlier, Martin's going to be speaking to us in May. That's always a good event and well attended. So I encourage you all to come to that. Anything else you can think of, Martin?
We've covered pretty much what I wanted to cover as well. Trying to think if there's any other warnings that I'd like the group to hear in preparing to get this sub 2 deal to the closing table. We've covered the warning signs that I see that might handcuff us and prohibit us from getting there. I do look forward to seeing everyone in May. I sent the bullet points over to Pamela and Tim this week. Very excited about legal updates. I know we're in session right now, but these are legal updates from the past year or two. There are some changes to the TREC 1 to 4. Not sure how many agents we have on this call or folks that use the 1 to 4, but there are some changes that are implemented right now and I think are mandatory starting next month. So we look forward to seeing a big group. Yeah.
Lisa Walker just did a class on the 1 to 4. She did a great job. That's on the website for those of you that missed it. It's on the, I believe it was the first Saturday in January, I believe.
That's right.
She did a great job going through the new contract. I'm sorry, it was February. she was one of the fortunate ones. She jumped on some training back when the contract was first released as a draft. So she got an early look at all the changes. So she did a really good job for us. Again, I want to mention though that for this subject to type contracts, I'm gonna recommend you stay away from the new Trek contract right now and use the sub 2 contract that I'm giving you in your documents, because that is what we've been using. And I have not compared it to the new Trek contract.
Yeah, if you haven't familiarized yourself with the entire 1 to 4, please do so. Read it at least one time front to back. There are a lot of items there that won't pertain to your sub 2.
Right.
And highly encourage you to use the forms that Tim's sharing with the group.
Okay, and then the other reason you're going to want to come besides Martin's legal update is he's going to talk about forbearance, and I think forbearance is going to be one of those areas that we all are going to be more involved in. We're going to see a lot more of. We never saw those kind of agreements back in the crash in 2007, 8, 9 timeframe, but I think we're going to see them quite a bit when these sub 2s start surfacing now. So that piece of the class is going to be good too, I'm sure.
That's right. And I mentioned earlier, I don't see sub 2s and similar type of transactions slowing down anytime soon, especially given the fact that folks don't quite understand what these forbearances actually mean in terms of the debt to repay. I compare those to loan modifications in the past where a borrower will sign essentially a second deed of trust, a second lien encumbering the property. And when they go to sell, they said, no, I only pay one mortgage. Oh, well, you actually owe more than you think. So watch out for that. I'm sure we're going to have a lot of consumers out there that are not only distressed, word that I always use, confused, and not really aware of what they have to repay.
That's regarding the forbearance, right?
That's right.
Yeah. And I mentioned to him earlier that the forbearance agreement isn't actually a public records filing.
Correct. And that's the difference between the loan mods that I just referenced and the forbearances that happened during COVID.
Yeah, that's going to reach out and bite some folks. You know, they think they have a really good deal and then they find out what that forbearance agreement amount is. That could really make a big difference in that deal.
Yep.
So you're going to want to make sure you know what you're working with. So, okay. Well, Martin, I think we pretty well got it covered. We have Mr. Randy Hughes, Mr. Land Trust, coming up here shortly. You're welcome to stick around, Martin, if you have time. He's joining us from, I think it's Cancun, I'm not sure. He's just going to take a few minutes and talk about how land trust can be used in conjunction with subject to deals for asset protection strategy purposes and things like that. So you and I have talked about him before, Martin. So
that's right.
You're welcome to stick around if you'd like. A lot of my land trust documents are from Randy. So
yep, we did talk
glad.
about him recently, and I am going to head back in. I saw when Pamela texted me, we had just finished, so I wanted to jump on as soon as I could. But yeah, thanks again, Tim and Pamela and the group for having me, and look forward to seeing you, if not before, early in May.
Okay. Thanks, Martin.
Thanks.
Appreciate it.
You'll have to call Randy.
Okay.
But he said call him on his cell right there.
Okay, so we have one more guest, and that's Randy Hughes, Mr. Land Trust. Like I said, he's down in Cancun, so he doesn't have internet access. So I'm going to call him on my cell phone and put him on the speakerphone like we did with Amy. And then when he's done, we just got some wrap-up slides, pretty much done with the day, and answer any other questions you have. So give me a second to call him. Any questions about Martin at all before I get Randy on the line? No, nothing at all.
JJ had a question.
Okay.
She said, so at closing, we are taking ownership from the seller. Does the original seller also come to closing when the house is eventually sold? Or is there simply a check cut to the original mortgage company?
So the only time, the original borrower and seller, they're going to go to closing that one time when they sell it to you, and then they never have to go back to closing again unless there's something that the new title company or the lender needs to have signed. But as a norm, there shouldn't be anything. It's happened to me one time where I can't remember if it was a lender needed a signature or the title company, because it may not close at the same company you bought from, right? So if I bought it with Martin and then my buyer goes somewhere else to another title company, they may have a question. They may want something else signed for documentation purposes. But that doesn't mean the seller necessarily has to go. They could FedEx it to them and have them sign it that way, or send a mobile notary out. But they should not have to go back to closing in most cases. Does that work, JJ?
Yes, thanks.
Okay, let me see if I can get Randy on the call.
Hi, Tim. This is Randy.
Hi, Randy. Well, we have the group here on the call here. You are on speakerphone. How was your trip?
Excellent. No hangups at all. Got here right on time. The weather's beautiful. The water's gorgeous, and I'm ready to talk.
So beautiful weather and gorgeous water, and that's Cancun?
Yes.
Shame on you.
I know. I come down here once a month, if not more often. I just love it down here.
Yeah, cool. Well, anyhow, we got everybody on the call here, and I'm just going to turn it over to you, Randy. I've kind of told them a little bit about you and stuff, but I'll just let you take over from here.
All right. Well, let me first congratulate everybody who's in the meeting today. I realize this is spring break, and there may be other things that would distract you, but it's the people like you that are so dedicated to learning and finding new techniques to make money in this business that will succeed in the long run. Because that's really the key here, is what we're talking about, is succeeding in the long run. This is my 50th year in this business. I started buying houses when I was 19, when I was in college. And unfortunately, that gives you an idea how old I am. But 5 decades of investing in real estate. It's a great business. But I encourage you all to not only learn the techniques that Tim is teaching you, like subject to, I know you've been talking about that today, but take a little bit of time and a little bit of money along the way to protect these assets that you're acquiring. Now, some of them are going to be, you're just going to make money and pay the grocery bill and marry off a daughter every now and then. And you got to have, money to live off of. But if you don't just want a job like everybody else on the planet has, you want to invest and have long-term security, you need to pull 1 or 2 off the table every year and keep them forever. That's the only way you're going to build wealth, and the only way you're going to be able to afford to go to Cancun once a month is if you think long-term and protect your assets. Now, there are lots of ways of protecting your assets. So you can spend thousands of dollars on different techniques. But I just want to talk about something we can all do very inexpensively, and that is not hold title to this stuff in your name. There's no advantage to holding title in your name. There are only disadvantages, only risks. You get all the same benefits of owning real estate in the trust that you do if you own it in your name personally. So if you get all the benefits without the negatives, why not? And personally, I don't think you should own anything in your name, whether it's your car, your boat, your motorcycle, or your shotgun. But right now we're talking about real estate, and certainly you should not own real estate in your name. I think it's always important to try to relate this subject to people on a human level, as opposed to just all theory. And I get calls like this all the time. I had a call a couple weeks ago from a lady I can't even remember what state she was in, but she said, how do I get this real estate out of my name fast? And I said, well, what's the hurry? And she was emailing me. And she said, I just had a bum show up at my door. She said, I'm divorced. I have 2 young girls. And a bum showed up at my door wanting to rent one of my properties to veterans. That's what his scheme was. And she said, it just freaked me out. And she said, I realize now that I should not own this stuff in my name. She said, so I called my attorney right away, and he said, well, you should put these in an LLC. And he said to me, he didn't know was they were already in an LLC. Now, most people don't know this, but there are only 3 or 4 states where you form an LLC where the owners are kept private. All the rest of the states publish the owners of LLCs. So that's number one reason not to use an LLC, to own title. Now, I have several LLCs. I think they're great, but you got to use them in the right way. And that's not to hold the title, but to be the beneficiary of the trust. Because trusts have no registry anywhere on planet Earth. You can't look up who owns a trust. So the least expensive and easiest, quickest way for us real estate investors to get off the grid, so to speak, is to have a trust hold the title and then have your LLC be the beneficiary. That's a great structure. Anybody have any questions for me before I continue? Any maybe in the chat box or anything, Kev?
Pam, is there anything?
There's not any questions in the chat box. But if any of y'all have any questions, I highly encourage to pick Randy's brain.
I'm sorry, I heard her, but I couldn't understand her. Ken, could you repeat that?
No questions right now, Randy. Go ahead.
Okay. All right. Thank you. So what you want to do is put each property into its own separate trust, so they're not combined together. And that's another reason not to use an LLC. A lot of attorneys tell you to title all your investment properties in an LLC. Well, I mean, just think that through. Think of the logic behind that. Let's say you got 10 single-family rental houses. You title them all in a LLC, and then there's a lawsuit on one property. And they sue, they win, they get a judgment against the owner. Who's the owner? The LLC. Now they got a judgment against all 10 of your properties because they're all owned by that one LLC. So you see, that's not very smart. So a basic tenet of asset protection is separation of assets. So you want each property in a separate trust, so they're all insulated from each other. Incidentally, there are lots of reasons to use these trusts, and many more reasons than we could talk about today. However, if you're interested, I've written a booklet with over 50 reasons to use a trust. And if you're interested in that for free, let Tim know, and he'll send me your contact information, and we'll get that to you. Another benefit of working with Tim is he's arranged with me to give you a free product that was just put out a few months ago. It's called The Beginner's Guide to Making Money Using Land Trusts. And that's a really good beginner's guide. It sells on Amazon for $9.97, but because you are in Tim's class today, you're going to get it for free. So again, if you'd like that, and both booklets, just let Tim know, and he'll forward that information to me, and we'll get that to you. Probably not yet today, but I can certainly get it to you first thing in the morning.
I really appreciate that, Randy. That's generous of you. And, I can't wait to see the new book. I haven't read the new book yet, so.
Yeah, it really kind of breaks it all down into pieces to get you going with the understanding of these trusts. I know sometimes they seem a bit intimidating. Most people, when they think of a trust, they think of banks and big columns and scary attorneys and that sort of thing, but it really isn't that hard to do. You can create these trusts yourself. And the cool thing is, once you learn how to do it, you put a template, a trust agreement template on your computer, and thereafter you can create a trust in 5 minutes. It's really, literally 5 minutes. You fill in a few blanks, you hit print, and you got a trust. And there's no cost. So once you learn how to do this and have the forms, for the rest of your life, you're going to be creating these trusts at no cost. So that's a pretty good deal, because most attorneys, even if you can find one that knows how to do this, they're going to charge you, depending on what part of the country you're in. The cheapest I've heard is $500. The attorneys in California are $1,500 per trust. In fact, I was having lunch with an attorney in down the financial district of San Francisco a couple years ago, and he claimed that he's the only attorney in town that knew how to create a land trust. I don't know if that's true, but anyway, I said, what do you charge per trust? He said, $5,000. I said, you got to be kidding me. He said, all these people out here make way too much money. They're working for Google and Yahoo and all that. They all make tons of money. $5,000 isn't that much to them. I said, well, hey, more power to you, but I'm all about learning how to do it for free. And you know, because if you think about your investment career, you're gonna have a lot of property. Some you're gonna hold on to, some you're gonna rehab and sell, and all the other techniques. So it behooves you to learn how to do this, so it doesn't cost you anything. Plus, learning how to do it then helps you learn some extra techniques to use these trusts with. There are, I mean, basically, these trusts are not designed as asset protection tools. They're more privacy tools. Although, as I mentioned, privacy is the first step of a real estate investor's asset protection plan, privacy of ownership, but they really weren't designed to be asset protection tools, but they kind of end up being an asset protection tool when you think about ways that they have taken care of people, especially, you know, if you think of like a property manager. I was down in Cancun a couple of years ago speaking at a forum called Real Estate a mentoring program that Jenna Simpson out of Dallas did for several years. And I was sitting across the table having a drink with some folks out by the pool, and this guy and his wife were across the table, and they said, hey, Randy, we got your home study course. We learned how to create trust. Thank you so much. And I said, well, why did you buy it? And the gentleman said, well, we were sitting home. He said, we're in Dallas. We have 15 single-family rental houses. They were all in our name. We were sitting home on a Friday night about 9:30, the doorbell rang. It was one of our tenants. And we didn't even know he knew where we lived. And he said, my toilet's all plugged up. I need you to come over. And my friend said, well, you know, it's 9:30 on Friday, buddy. I'll be there first thing in the morning. I'm not coming out tonight. And the tenant said, no, you don't understand. You're coming out tonight. They had to call the police. Big brouhaha occurred. And they realized that night, you don't own the stuff in your name. Because all that tenant had done was looked up his address online, found out who owned it. I looked up that person's address and marched over demanding action. So there are so many ways to use these trusts to protect yourself. Certainly as a property manager, especially if you're a woman property manager, whether you're managing your own property or somebody else for a fee, you need that anonymity. I've been a landlord for 50 years. 20 of those years, I had two little girls growing up in my house. And the last thing I needed was some guy I was evicting come knocking at my front door, and my 7-year-old daughter answers. So you folks can see that there are not only asset protection reasons, but there are real life-threatening reasons to not own real estate in your name. Any other questions before we move on?
No questions right now, Randy. I did want to just make a comment, though. I don't know if I told you this. You were talking about how easy it is once you get them set up. Well, we've set all the forms up in our RealFlow system to be autofill now. So, you know, that makes it even easier, you know, with just a couple of clicks, you can go fill those forms. So, but yeah, we love all those forms. you know, it makes it a lot easier to get them filled out.
Good idea. Now, I assume most of you folks are from Texas, and I'll just tell you that Texas doesn't have an exact, specific land trust statute, but most states don't. In fact, only 6 states do. But that doesn't mean you can't form a trust in Texas. It also doesn't mean you can't form a trust somewhere else. Now, think about this. There's no federal land trust law. It's all state by state. And so what that means is you could form a trust in another state to hold title to your property in Texas. Now, why would you want to do that? Well, there are some definite asset protection benefits to using an out-of-state trust for your in-state property, no matter where you're at. And let me give you an example. All my investment properties in Illinois, but I don't use Illinois land trust. Even though Illinois is the granddaddy of land trust law, everybody seems to understand them here at the state. The attorneys typically do, but it blows their mind when they find out that the trust holding title to my property is out of state, perhaps Virginia or Florida or some other state. What we're doing here today is just scratching the surface of these many benefits. If you like this concept, I would love to teach you all this stuff. I have what I call the Land Trust University for my students, which is online learning, videos of me teaching the material to a live audience, explaining the forms, a list of land trust friendly lenders, land trust friendly insurance companies. I'm the only guy on the planet doing a land trust newsletter. I do that bi-monthly. And I also do a monthly coaching call for my students where we talk on a Saturday morning for an hour about privacy and asset protection techniques, how to link these trusts together with other entities, equity stripping, all kinds of cool things that I've developed techniques over the years, options on real estate, personal property trust. Now, I have, and I think Tim's going to give you a link to my basic land trust course, and that's all you really need to get started. But once you get there, you'll probably see that I also have an advanced course, and it's more asset protection technique related and personal property trust related. So I teach you how to fill out a personal property trust agreement. And so if you want to put your car, your boat, your motorcycle in a trust, then it would go in a personal property trust. So here's the difference. A land trust is a type of living trust, but it's exclusive to real estate. And what's really cool about them is the beneficial interest. That's what you or your LLC owns and controls the trust through, is that beneficial interest. That is legally personal property, not real estate. So I don't know if you folks talked about this, but I love to buy houses for people who can't afford or can't qualify for a loan. I've found that there are a tremendous number of really good folks in America that can afford a house but can't qualify for a loan, a conventional loan. You know, their credit score is too low. Maybe they're self-employed. Maybe they're in a retail cash business and don't report all their income. But bottom line is they got money. So I love buying houses, negotiate, of course, the best price I can. Then I mark it up and I sell it to them on a contract with a down payment and monthly payments to me. And I feel real good about doing that because I'm providing a service, providing housing for folks that would never be able to buy a house if I didn't do that. And at the same time, I'm making good money because I charge 7% on the contract. If I have an underlying loan at a bank, it's usually right now around 4%. So that means I'm making 3% on the bank's money and 7% on my equity. And, you know, if you sell a few of those, you kind of build up a nice little monthly income and defer capital gains quite a bit in that regard too, as opposed to selling for all cash. I mean, unless you really need the cash to buy groceries with, you're better off doing that because you can't make 7% interest on your money at the bank. You know, so if you sell something for 10 grand and go to the bank, you're going to make less than 1%. Whereas this way you can make 7%. So great concept. Where can it go wrong? That's one thing you need to always ask yourself when you're doing these deals. Where can it go wrong? How can I prevent it from going wrong? And the way these things can go wrong is when you sell on a standard contract deed, you have the same risk that banks have, and that is what happens if the buyer stops making payments. Foreclosure is not a fun thing to go through. In Illinois, I helped a guy a few years ago go through foreclosure who did not take my advice. The contract buyer defaulted. It took us a year to get the property back, and he spent 10 grand in legal fees. So that put a big hole in your profits real fast. So the way I solve that problem is I sell the beneficial interest in the trust. Remember, I said it was personal property. I sell it on a contract. That means if the buyer defaults, I repossess. I do not have to foreclose. Now, what does that mean? All of you have bought a vehicle probably and financed it. What if you didn't make the payments to the bank? What would they do? Right. They're going to send out the repo man who's going to send his truck with a hook on it and come out to your driveway and pull that truck back to the bank. And that's exactly what I do if my buyer defaults. I repossess the beneficial interest. I don't have to foreclose. That takes me roughly 30 days, and I'm back in business. And I sell a property again. So that's the way I put that whole, the risk involved with selling on a contract. I've really not had too many problems. I've had 3, maybe 4 people that I took the house back. As I remember, 2 or 3 of them just gave it back to me. You know, they lost their job or whatever the reason was, they couldn't continue and just gave it back to me, which the one guy did that last year, and he's been on the contract for 8 years with me. Yeah.
Randy, would you
Excellent.
would you
Yes, Tim?
yes would you repeat that statement one more time so everybody gets it, where you sell the beneficial interest on a contract,
Right.
and then because it's personal property, correct?
Right.
And then you repossess, or I guess, is that the word?
I repossess. If they default, I repossess. I don't foreclose.
Right. You repossess the beneficial interest.
Right. Just like a bank would repossess the car you financed if you stop making payments. Same deal.
And
so it works really, really well.
yeah.
They don't cloud the title of my property because I don't allow them to record the contract. So there's no problem with the title, which can be a big problem. Hold on just a second, Tim.
Okay.
Okay. Sorry, that's in a taxi on the way to my hotel, and there are several hotels with the same name, so we're trying to figure out which one to drop me off at. There are many REIU hotels, but anyway, so yeah, that's a great way to make money in this business. There's so many ways of making money. It's just mind-boggling, but I guess my final advice to everybody would be, find find something that works, a technique that works for you, and do it over and over again. Don't spread yourself too thin trying to learn this and that, and have all these different techniques, and none of them you do well. And another thing is, if you're going to pull some of these properties off the table and keep them, you're probably going to manage them yourself. And if you do, find properties, the type of property that fits your personality. And what I mean by that is, I used to own a bunch of apartment buildings on the University of Illinois campus back in the 80s and early 90s. And I just finally came to the conclusion that this apartments just didn't fit my personality. It was on the university campus. We had 100% turnover every year. And kids would tear the crap out of the apartments just for the fun of it on the way out. So there's tremendous turnover, headaches. And that's just not what I wanted to do with my life. So I've specialized in single family houses. I like them. 80% of my tenants renew every year. I only have 20% turnover. They appreciate regardless of what they rent for. Obviously, apartment buildings, the value is determined by the rents. That's not the case with single family houses. They can go up in value no matter what they rent for. So that's for me. That may not be for you, but that was for me. But the point is, find, if it's managing RV restaurants or 7-Elevens or whatever it is, find something that fits your personality, because it's got to be something you're going to have fun with and you're going to enjoy all your life. You don't want to be tortured your whole life with a way to make money, but you don't like it. And that's how I found myself with apartment buildings. Now, like I said, I started buying houses since 1969, and most of them I kept. But then I went into the apartment business thinking that would be good, and it was profitable. And I know a lot of people, especially on the university's campus, that have made a ton of money in the apartment business, but they earned it. They earned it because it's not an easy business, in my opinion. Maybe it is for other folks, but do we have any questions or anything, Tim?
We do have a couple. We do have a couple now, Randy.
Okay.
Nellie's asking, here in Texas, we have Texas series LLCs, and I'm not quite sure about the question, but it's related to rental properties under a series LLC. Would you do the same thing, Randy, with the beneficial interest? You put it in a trust, and then the series LLC would be the beneficial interest, or what?
Yeah. In fact, my LLCs are all series. So I'm very familiar with the series LLC, and it's a great way to get further asset protection at the beneficiary level. So yeah, that's a great way to protect each little series within the LLC.
Okay. And then the next question,
Go ahead.
the next question is from Martin. He says, several questions. Create a land trust for each property, including our private home.
Yeah, I assume you mean your personal residence, right?
Yes.
Yes, sir.
Yeah, I mean, obviously there's not as much risk involved with a personal residence as there is with investment property, but I go back to the feeling that I'm just not going to own anything in my name. That's just not worth it.
Yeah. And I think that the attorneys will tell you that with that homestead exemption that you get in Texas, then it's going to give you some added protections as well. So, but I understand Randy's point, it's just to take your name off public records altogether.
Yep. It's just best just to get off the grid. And Tim, I had, back when I first started buying houses, I had probably 15 houses in my name personally before I woke up to the realization that wasn't very bright, that anybody could look up what I owned, what the debt was, what they were assessed for, and with those numbers, you pretty much could approximate my net worth. That's just like going to a cocktail party and putting your financial statement on your back, taping it on your back and saying, look at me.
Yep.
You see, here's the deal. Attorneys don't sue poor people. No matter what they do, no matter how liable they are, they don't sue them because they know they're not going to get paid.
Right.
They do what's called an asset search before they sue you. You don't even know what happened. They search your name, find out what assets you have, and then they decide if they want to sue you or not, because they know there's a difference between suing and winning and collecting.
Yep.
So, just don't fall into that. Just take your name off the grid, and your life will be much happier.
Right. Here's another question for you. Can more than one land trust be placed in a single land trust?
No, see, because remember, the beneficial interest in land trust is personal property. A land trust holds real estate, not personal property. If you want to hold the beneficial interest in a trust, you would hold it in a personal property trust. And that's what we call stacking of trust, or layering is another way of looking at it. You could stick 10 different trusts in there in between the title of the land trust and the ultimate person in control, the ultimate beneficiary, if you wanted to, just bury it as deep as you can. But at some point you gotta finish the paperwork and go out and make another deal. So you can kind of knock yourself out with this stuff if you want to, if you like it. So most people are pretty happy with just putting it in a trust and making an LLC to the beneficiary, and moving on out and making more deals.
Yeah. So the next question is, can a land trust be sued? And if so, and they are in a single LLC, will they? I don't quite understand that.
Sorry about that, Tim. I didn't finish typing that. But
The first question, yes, you can sue anybody for any reason anymore. But the idea is to try to make it as difficult as possible for these contingency fee lawyers to just come after you and threaten you and intimidate you into giving them free money. So if they, it's like throwing hurdles out in front of them. If they see too many hurdles, they're just going to go off and sue somebody else that owns real estate in their name. It's too hard. They don't like hard. They like easy money. And so just by not owning title in your name is going to avoid a whole lot of frivolous lawsuits. Now, if you hold it in the trust and it's an out-of-state trust with an LLC as a beneficiary, let's say it's the property's in Texas, it's a Florida trust holding title, and you got a Wyoming LLC as a beneficiary. Oh my gosh, what a mess, huh? Well, you understand it because you put it together. It's not difficult. But if somebody's coming after you, it's going to cost them a lot of legal fees to get to the bottom of that.
Yep.
And starting with just finding out who's in control here. Because what's interesting is on a deed, it doesn't say where the trustee lives. It doesn't say what state the trust was formed. All that's information they're going to have to try to dig out of you, and everything's going to cost them legal fees. So chances are they'll just go off and sue somebody else, unless it's something real serious and you did somebody some real harm for $1 million or more. They're just not going to chase you, and that allows you to sleep better at night, to go out and find more deals and not worry about these contingency fee lawyers and their deadbeat clients.
Yep. I agree. So
I think I've used my allotted time. I hope I've made an impression on you folks. Please consider getting my home study course. If you do, I will personally walk you through forming your first trust. We'll get it set up with a template that you can use thereafter. You can call me. You can email me. As you can see, it's Saturday. I'm in Cancun, and I'm talking to you. That's how serious I am about servicing my students. I answer my phone 7 days a week, 7 a.m. to 7 p.m. If you have any questions, problems, concerns, you can email me. If it's midnight and you don't want to wake me up. But I give service like nobody on planet Earth does. Because I partly do that because I don't get service anywhere I go, it seems like anymore. There's service is dead in America, in my opinion.
don't I know that?
Yeah.
What's customer service?
that.
Nobody knows what that is anymore.
So, give them the link, Tim. If anybody has any questions, my email is randy@mrland.com. trust.net.
I've got all that on a slide for him,
Got all
Randy.
that?
Yep.
Okay, good.
Yep.
Send me an email. I'll be glad to discuss it with you. But if you get the home study course, you're gonna get a free membership in my Land Trust University for 3 months. And if you talk real nice to Tim, he may even recommend you get 6 months free. And that's a great value there. We'll get you up and running, and you can use these trusts the rest of your life.
Randy's Land Trust University is awesome. It's unlike anything I've ever seen. And just his comment about customer service, and making himself available. I chime in on a lot of his calls. He does these Saturday calls. I send him emails. He answers the email. He's very responsive. Like he said, so many people don't even know what customer service is. So I love what you do, Randy, and I appreciate everything you do. We have both your basic and your advanced course, and I love it. So
great. All right, well, I'll wind it up. You guys have a great day. Again, congratulations for putting the time in today, because you're learning techniques that are going to last a lifetime, and that'll set you apart from the average Joe.
Thank you, Randy. Appreciate your time. You enjoy your trip down there. Be safe and enjoy that clear water, that blue water, and sunshine. So
I will do that. Can you receive a text at this phone number?
yes, sir.
I'll send you a text to this lobby here. This is a pretty nice lobby. I'll send you a text. Maybe you can show it to everybody.
Cool. Thank you.
And the blue water's in the background.
Yeah, I appreciate that.
Thanks for having me on, Tim. I love talking to you.
Thanks, Randy. Appreciate it. All right. Bye-bye.
Bye-bye.
Was that good or what? So he really means what he says about servicing his customers and stuff. There's so few people that do that nowadays, but I've known him for several years. He's spoken at the group several times, and people just love him because he does what he says he's going to do. So, okay. So we're about to wrap up here. I had a couple slides here, and this is kind of leading into his presentation, but since we got him on there early, like he said, personal name, legal entity, or land trust. Hopefully you understand now that the land trust is a better way to go for anonymity purposes, and keeping your name off public record. That's the whole purpose behind it. And it's just another level of difficulty, another level of protection in case somebody does decide to come after you. And you don't have to do anything wrong to get sued nowadays. I mean, people can just come after you because they got up on the wrong side of the bed. So just keep that in mind. Using your personal name doesn't really provide you any protection at all. Legal entity gives you some, but really not an awful lot when it comes to lawsuits. Like Randy said, that attorney's going to look you up and they're going to find you. And if you had multiple properties in one entity, you're going to have a big problem if you get sued and lose. Oh, by the way, even if you get sued and win, is that a good thing? If you get sued and you win, just think about what you lost, though. You might win in the end, but what about the lost sleep, the stress, the money, the time to prepare to go to court? Let's think about that. Even though you won, you didn't win. So the point is, try to prevent those things from happening. So if you have the land trust strategies in place, that helps prevent somebody from being able to sue you very easily. Okay. So I think Randy pretty well covered all this stuff. Land trusts are not required with your subject to deals, but it's certainly encouraged to utilize them in conjunction with sub twos and any kind of deal, truthfully. But it works really well with the subject to deals because you get the personal names off public records. Okay. Another level of protection. I think we pretty well covered all that. And so here's Randy's info. I can send you separate links on this if you'd like. The first link here for you, you're going to get all this in the presentation anyhow, but the first link is his free webinar. You can go pick a time that's good for you. And if you want, I can put this in the chat box and then you'll have it. But it's a free webinar that he does on a routine basis. And then you can hear him teaching more about the strategies. You can tell he's a great teacher. He really takes it personal in teaching this stuff. And then the other links here is the products page on our group website. He has two products. He has a basic course and advanced course. So you can click on the link here and go over there and take a look at it and see what you think of it. Now, the one thing I didn't want to correct him on the call, but his assistant has actually agreed to giving us 8 months of membership access to his Land Trust University. So you notice I have it right there, 8 months. I'll go back and confirm that. He did say 6 to you, but I'm going to go confirm it because I'm pretty sure that they agreed with 8 months. Okay, that's if you buy the course. I will get you. Did everybody want the free book and his ebook as well? Everybody?
Yes.
Okay. So I'll get you that information and get it sent to you. It might be a day or two before you get those. So just give me a little time, but we'll get that taken care of. And that was the surprise that Randy was giving you. I didn't put it in here. I let him tell you that he's going to offer you his new book, the 997 book that he just wrote. So I can't wait to see that. I've not read it yet. And any questions about Randy's stuff here? Okay. Here, let me drop this link in the chat right now real quick before I forget it. Well, okay, so you have the link now. Okay, we just got a couple slides to wrap things up. Any questions before we go any further on this while I'm pulling up the slides? Any questions at all? I want you to know you've been awfully quiet all day. Can you see the slide now?
Not yet.
Okay. Why am I having such a hard time with this? We don't normally have these kind of issues. I'm not quite sure why.
Yeah, we see it now.
Okay. All right. So here we go. Just a couple more minutes left. What to expect. So as I mentioned earlier, you're going to get audio, video, the presentation materials, forms, contracts, disclosures, all that stuff is going to be uploaded to a special page. I did that last year and it seemed to work out pretty good. And I do plan to do that again. It does take a little bit of time to get it all done because there's like 6 or 7 different videos and audio. So we're giving you both audio and video so you can put it on your phone or just watch the video. It takes time. Give me a few days to get that done. Please take action and go implement what you learned today. If you don't use it, you lose it, right? And you'll know that that's really true as you get older and your hair starts changing color. Either you use it or you lose it, one of the two. Okay. I'd rather you go use this information and build your business and make some money and help a lot of sellers doing it. Okay. You snooze, you lose. If you don't get out there, step out, promote yourself, market your business, market your message, you're going to lose those deals. Sellers aren't going to find you. Don't do like my friend. and be afraid to tell his church buddies and school buddies and family what he does, because they can't come for help. They can't ask you for help. You want to tell everybody who you are, what you do, and how you can help them. Okay? Don't be bashful about it. You can't make any money keeping it all to yourself. If you enjoyed what you learned today, please tell others. Help me promote it for the future. We had a very small crowd today. We had 42 people in the last class. We only had 8 today. Kind of shocking, but I think it's got to do with spring break. You know, it's bad timing on my part. I didn't plan that very well, but my hat's off to you for taking the time, making the time to come to this event today. And I hope you feel that it was worth it. I really would appreciate if you go give us a testimonial. It's pretty simple, and I'll tell you how to do it in just a second. I also would like recommendations from you. If you have ideas, thoughts, recommendations for me to make it better, that's my goal, is to improve on it every year. The one problem I have is time. You know, this year I added quite a bit of stuff, and things went kind of smooth. I was talking fast, and I hope I wasn't talking too fast, but my risk is I keep adding stuff and it gets to the point where it's so long I can't get it done in one day. My voice is about shot now. I may go back and do a couple other, or at least one other video to get into some deals a little bit more with you, and throw that into the mix so that it hopefully will help you with analyzing the deals. Or maybe we'll do a future call on deal analysis, but we need real deals. I was hoping that somebody would bring some real deals to the call so that we could do those live on the call and help you through it. So, but maybe we'll do something like that in the near future. If you would take 1 to 3 minutes and do a testimonial for us, we'd really appreciate it. If you do that, I'm going to give you a couple of bonuses. Anybody like bonuses? Nobody? Nobody likes bonuses?
I love them.
You sure?
I love them.
So the first bonus is selling your house subject to special report. This 11-page report is great for sharing on your website, and maybe as a leave behind with sellers. So if you're out visiting with sellers, take a copy of it with you and leave it with them. Now, I'd highly recommend that you review the copy I give you and edit it and put your contact information in there. I'd appreciate if you leave mine in there, but it might not help you build your business. Okay. So I'll give you that report, and I will also give you a 6-page stop foreclosure guide. Both of these are excellent documents to have on your website for any sellers that are looking for help in these kinds of things. And then I'm going to give you buying houses subject to pros and cons of taking the deed 9-part audio that I did last year. This is strictly an audio file. It's actually 9 parts to it. And then you can download that, put it on your phone and plug it into the car, wherever you're at, out running, whatever you're doing. But this is kind of a precursor to the workshop because it gives you more of the thought process side of that class. Has any of you listened to the pros and cons class that I've done? I've done it a couple times now, and it's usually a great turnout. But it's not the how-to side of things. It's the thought process and is it a deal, not a deal, so on and so forth. So it's really a different perspective than what we talked about today. So you can record your video testimonial immediately after this call. We can do it on Zoom if you'd like, or we can set up a time to do it later, or you can do it with your cell phone. It doesn't have to be professionally recorded. Your hair doesn't have to be perfect, all that stuff. You can do it any way you want. That's what I like, is the more laid back approach. And then we'll be able to use that on our social media and the website and stuff. So if you would do that, please just reach out to me and let us know on the questions email address. You can do it any way you want. Okay. Like I said, it don't take long. We can do it in Zoom. I'd also appreciate you going to this link here and doing a Google business review. That is a very simple process, and it takes you just a couple of minutes. If you don't have a Google business page yet, I highly recommend Google My Business account. Go get one set up and go start building it and posting on it and sending people to it, because that's going to be very important to you once you start building your business. You want a place to send people to, okay? You got to have that place to send people to write reviews. This is the one for the group. You know, that's another way to help promote the group, to get more people involved in these things. So I just sent that to you in the chat box. Can you see the PowerPoint again, or did I lose that again?
We lost the PowerPoint.
How about now?
Nope.
Seriously? I don't understand what my problem is.
So we can do a video report, a video review, and just send it to your phone number or to the email.
You can try that, but if it's very long, it may not go through. So try it to the email. If that doesn't work, just let me know and I will send you a link that you can upload it, like on Dropbox.
Okay, sounds good.
Okay.
PowerPoint's back up.
Thank you. Okay, so there's the bonuses again. Okay, JV on deals. So for many people, you know, those first couple of deals, it can be kind of nerve-wracking. You don't really, you're not comfortable. You're not sure about dotting the I's and crossing the T's and so forth. So we can joint venture. You know, some people call that mentoring. It is in a way, but I'd be happy to joint venture with you as long as there is a deal there. This is actually my website with the group. So you all have a website with the group, and this is mine. And all I'm doing is using this as a way to joint venture. So you can click on that link and just go submit that property as though it was your house. And then just put all the notes in there, who you are and the phone number and contact info and all the details. And then I'll reach out to you and we'll talk about whether or not there's a deal there and how we might joint venture on it. Okay. This is an easy way to get you moving forward when you have deals, and, you know, learn while you earn the process. Okay. So here's some investor resources for you. We talked about different websites and stuff on the call today. And this one here, you all have websites, but there is a premium version upgrade that is full of powerful tools, deal and analyzer tool, repair estimator tool. There is an offer generator. There's a seller net sheet. The offer generator is unbelievable. It spits out 8 offers and then it creates a letter of intent for you instantly, which is super powerful. So you can go schedule yourself for this demo. Again, these links will be live in when you receive this presentation. You also probably all receive an email from Real Estate Promo, who is the company that built the website for us, and you can schedule a demo that way. You can also go click the here button and go upgrade, learn more about it right on your website, and upgrade there if you want to do that. It's only like $29 a month for the premium tools, but you know, I mean, there's like 4 or 5 different tools that you get for that upgrade price. Very, very powerful tool. The other website system that we use is Investor Carrot. It's a great site for lead generation. I had 5 of those sites for many, many, many years. I now have 3 just because I have so many. But I love the Investor Carrot tools from a search engine optimization, lead generation perspective. And then my CRM tool I use is RealFlow. There's a system overview right here that I did on the tool. I've been on it 11 years. That should tell you something about the system. I use RealFlow every day. Pam uses RealFlow every day, from lead generation to direct mail to pre-screening sellers to generating our contracts. I mentioned earlier, I have all Randy Hughes's contracts and our subject to contracts all set up in RealFlow to autofill. So it only takes a couple minutes for us to generate contracts now because it's all set up inside RealFlow. Okay. So it's a powerful tool. There is this link right here on the group member special for RealFlow is on our group page, and we have the best deal in the country that nobody else has. And it's because I've been working with RealFlow for 11 plus years. They gave us a special deal. So if you decide you like it, that's the place to go purchase it. It is a 1-year subscription. You can't do it by the month for this particular package. Monthly, it's $125. You can get it for $75, but you got to buy it for an annual subscription. Okay. But because of that, you not only get the discount, but you get the training videos that I offer. You'll see it if you go in here and read this promo info. I've created some training materials to help you get started. Plus, I've talked them into giving you 2 of their courses that you need, and that is Facebook marketing and private lender, how to raise private money. You get those 2 courses for free included when you're with your subscription. Nobody else in the country is getting this price. Everybody else is paying that $125 a month, and they got to buy those courses separate. So this is a super good deal. And then one other cool little toy here that I like is some of you may have seen my video emails, but I like to play with BombBomb video email. It's a nice way to personalize your business with sellers. You can record desktop video and your webcam, and it's just a nice little way to personalize. If you can't meet with people, personalize it, make it feel real. I do video offers now. So I put together a PowerPoint, I record it while they're looking at me explaining it. So it's the next best thing to sitting there. It's kind of like what we're doing now, what we've been doing all day, as you see me while I'm going through the offer. So some people really like it. And the other reason that they like it is they can replay it. They can stop it, pause it, rewind it, and replay the offer. You know, it's hard to do that if you're talking to them on the phone or you go meet with them. They can't just replay it if they miss something. Okay. For those of you that may not be members yet, you have a membership benefit offer here today. And for those of you that want to join the group as a paid member, if you use this action taker code, all caps, no space, you'll save $20 annually on your membership. And if you go to the membership page, you'll see all the benefits there. There's just a ton of benefits to becoming a member of the group. And also, if you do that today by midnight, then you're also going to get a group We Buy Houses t-shirt. I know, JJ, you haven't come and got yours yet, but and you also get Ron LeGrand's book, How to Become a Quick Turn Real Estate Entrepreneur in Any Market. Those of you may not heard that, I'm a Ron LeGrand fan, and I was a mentor for his students for about 5 years. And I just love what he teaches. One thing I meant to put in my presentation, and I didn't, one of the things that I should have said in the very beginning, and the reason why you need to be paying close attention to this strategy is, Ron told me in my very first seminar, and I'm gonna fix this before I send this out to you, okay? If you don't write a check, you can't lose money. Does that make sense? Does everybody understand what that means?
Yep.
If you can learn to negotiate a deal and not write a big check. Now, when I say check, I'm talking about thousands of dollars, you know. I don't think $10 or $100 is really money, right? But if you don't write a check, you can't lose money. So if you learn how to negotiate these subject to deals correctly to minimize your risk, you can't lose money. Does that make sense? If you learn how to use the option period, if you learn how to structure the deal with the seller so that, let's say it's an over leverage. Let's go back to the over leverage property where there is no equity in the deal. Do you want to close on that today if you don't have any equity in it? That's a high risk deal, right? You could potentially lose money if there is no equity in that deal. Okay. Look, just as an example, they owe 200,000. It's worth 200,000. Why would you make an offer on that house? Because there's no equity in it. But you can go make an offer and have a good option period. Let's say you got a 14-day or a 30-day option period. Now you can go market it for sale with owner financing and offer it for 200,000 or 220, right? Because it raises the value from 200 to 220. And if you find a buyer and get 10,000 down, 20,000 down, now don't you want to close on it now? Does that make sense? You don't want to close on it if you can't make money on it. If it's only worth 200,000, you can't make any money on it. If you close on that house at $200,000, you're losing money the first time as soon as you pay closing costs, start paying utilities, do any kind of fix up, marketing to sell it. Aren't you losing money in that case? But if you only have an option on it, that gives you equitable title. Now you have the ability to market that house for sale. If you don't have that contract with that option agreement, you can't market it for sale. Is that making sense?
That makes sense to me.
Anybody not understand it? I mean, this is an important step here that you understand what I just said, because you could go write a house and make a mistake and write it up for $1 million and it's only worth 100,000. And most people are going to panic over that, right? But as long as you have an option period and you terminate the option within the period like you're supposed to, you comply with the option period and you terminate in writing like the contract says, then you can terminate your option and you didn't lose a thing. And you can sleep at night. I hope that makes sense. That option period is critical, really critical. And you can use that in so many ways. So let me give you a case with self-directed IRAs. Did anybody listen to the equity trust workshop last Tuesday night or last Saturday? Anybody?
No, not me.
Okay. So let's take that same $200,000 house with no equity. So they owe 200. Let's just say they bought it, COVID hit, they both got laid off from their jobs or their business went under. So they can't make the payments. They owe 200,000. It's worth 200. You go and put a contract on it and you're using your self-directed IRA through equity trust. This is one of the most powerful strategies that equity trust teaches. So you go write the contract with your IRA making the offer. So you're going to say, let's take JJ, for example. So she's going to go write the contract. The buyer's going to say, equity trust custodian, FBO for the benefit of, that's what FBO stands for, JJ Conway IRA. Okay. in order for you to take earnest money out of equity trust, it has to be at least $100. So you go write that contract for $200,000 to the seller. Your IRA is the buyer. You give them, you request $100 earnest money deposit from your IRA. And now you've given them the earnest money. Now you go market the house for $220,000. Okay. You find a buyer at $220,000 and you close it. You close it. You get $220,000. Well, you're going to get $20,000 at closing, right? Well, guess what? Your IRA is going to get the $20,000 at closing, minus closing costs, right? But you invested $100 from your IRA, and you're going to have close to $20,000 that goes back in your IRA. And if that's a Roth IRA, that's completely tax-free income. All because you invested $100. All because you took an option on a house that didn't have any equity in it. Does that make sense?
Makes a lot of sense.
So, I mean, that's exciting stuff when you think about the potential. You could start off with no money in your IRA to speak of. You have to have money to open it. But if you had at least $100 in there to go and invest in earnest money, and you could wholesale properties using your IRA. Now, if you do this, you can't be using that money. Okay. What comes out of your self-directed IRA has to go back in the IRA. You can't take profits out. You can't pay yourself. You take $100 out, the profits have to go back in. It's not limited to the contributions that you have each year based on your age. There is no limitation on profit. So if you invested $100 and you made $50,000, that's $50,000 tax-free in a Roth IRA. That is a powerful strategy. And when you get time, you should go back to last Saturday's workshop and listen to John Bowen teach that class. He's going to blow your mind. But powerful, powerful strategies. You can lend money doing the same thing out of your self-directed IRA. You can borrow money from other people with self-directed IRAs, and your IRA can buy houses. If you buy a rental property in there, then the IRA puts down the earnest money. It pays, all the title costs, all the closing costs, all that stuff come from your IRA, and then all the profits have to go back in that IRA from your rental income. So powerful, powerful strategies using that self-directed IRA stuff. So, okay, well, my throat is about shot. I think we're just about done here. Sponsors, for those of you that are paid members, there's all of our sponsors. These are sponsors you can trust. You can go to the sponsors page and click on it and see all the contact information for each of these folks. I highly recommend that you go there frequently. I'm hoping that we have a property management company on board here shortly that can help you manage your properties and pre-screen tenants and things like that. But these are people you can trust, people that I use, have been using for a long time in my business, and hopefully you will too. So I think I am done. Please unmute yourself and let me know if there's anything else.
Thank you.
Your thoughts, good, bad, missing anything?
Not that I can think of.
I
I'm
really
still-
enjoyed it, and I look forward to reviewing it over and over and over again.
Mhm.
Yeah, me too. I think I'll have more questions once I actually get started with some properties.
Yeah.
That will make a big difference when you actually start getting leads. And that's why I was hoping that we had some real live leads. I've had a couple come in, but they didn't pan out to be anything. So I think I I may not have said this up front, but let me say it real quick now. I believe that the reason that, did I tell you the reason why I think there's not a lot of pre-foreclosure activity? Did I already say that at the beginning?
Mhm.
Yeah, I think it's because the government's still protecting everybody. You know, the foreclosure moratoriums, the government subsidized checks, you know, the unemployment stuff. You know, why do people want to voluntarily leave their house when they have no place to go? If they haven't gotten back to work, maybe if they've lost a loved one even, you know, they're not in the mood for moving. And the government keeps prolonging the foreclosure moratorium. Why not stay there until free, you know, until I'm kicked out the door, right? So I believe as soon as they start talking about no more extensions, when the Biden administration says we're not extended again, I think you're going to start seeing a lot of sellers take this a little more seriously and start pursuing options to sell their house. And that's what I want you to do, is be in that position. Start marketing now. Start getting your websites out there. Do blogs. Get your direct mail working. Get it out there. Get that pre-foreclosure list and start marketing to it, so that when they are ready, they know who to call. Now, is that a guarantee? Nope. But that's what I believe, and so do many others, because they just don't have any pressure to leave right now. Now, some people I'm sure are doing the wise thing and starting to look at their options and stuff. But I believe that when it starts coming to the point where the news, the lenders are all saying that there's no more extensions, I believe that's what's going to happen. People are going to start picking up the phone. They're going to start visiting websites. I want you to be out there so that people can find you. And hopefully they're going to start calling us. We'll start seeing more activity. I'm seeing a lot of probate activity. I'm not seeing any pre-foreclosure activity, or very little.
When did the forbearance start?
Not long after the COVID last spring, so roughly a year ago.
Wow, I've been out of touch with real estate.
Yep, it's been about a year. And you know, they've had a couple extensions on the forbearances. Everyone's different. All the lenders are different, my understanding. And that's why I asked Martin to give us a little update on forbearance and some of the legalities of it and the ins and outs and stuff, so we have a better idea of what we're going to start seeing come the summer.
Could that mean that some of these people owe 10,000 or more?
That could very well mean that.
Wow.
My understanding is some of the forbearance agreements cover just a piece of the payment. Some of it covered all of the payments for some period of time.
Okay.
So there's not one answer is what I understand. And I'm hoping that Martin can shed some light on that next month. May. So, okay. Well, I'm tired. So
Well, that was a lot of material. Thank you very much.
You're very welcome. Happy to do it. If there's any last minute questions, comments, things in the chat, go ahead and drop it in there, or the email questions@westdfwreigroup.com, and we'll get all that stuff answered as soon as possible. I will get you the Randy Hughes book and the free report. Just bear with me. It'll probably be, first of the week or so. I got to wait for him to get it to me, and more than likely it'll be the first of the week before I get time to send it. So what else? Anything else? I appreciate the diehards here. You hanging out with me still. The last day of spring break.
Thank you.
You're very welcome.
It was well worth the time. And I would like to do a Zoom video as soon as we can get it together.
Okay. You want to do that the first of the week?
Yeah.
Okay. Thank
Sure.
you very much. Appreciate that.
Mm-hmm.
All right, everyone. Well, I think it's a absolutely gorgeous day out still. So go enjoy the rest of your day. And I appreciate your time, and hopefully you got something out of this. I don't think I said it, but you get 30 days follow-up with me on email. So if you have questions, feel free to shoot me an email. Just realize I've got a business to run too, so I may not respond instantly, but I will respond with the best answer I can. So I think that's it.
Okay, great. Thanks so much. Have a great
Thank you
rest
so
of your week.
much. Okay,
Thanks,
bye.
Tim.
Have a great weekend. Take
You
care.
You want us to record our testimonials now?
You want to do it now?
And you can strip it out of this video later?
Yeah, what I'll do is I'm gonna stop this